What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
This week we sat down with Eric Balchunas from Bloomberg. Great episode. Was looking forward to it for a number of weeks. Eric delivered. We talked about his 20 years at Bloomberg, his first point of contact with Bitcoin back in 2013, and then we went up to 2023 talking about where he started to cover with his colleague James the filings for the Bitcoin ETFs, and then fast forwarding to 24, the launch of them, and then to the present, really 18 months later, the most successful ETFs ever launched. So we talked about institutional demand there, retail appetite, where the ETFs are bridging the gaps. We also talked about where the ETFs are falling short. Michael and Eric exchanged a lot of thoughts there just on counterparty risk and how investors need to think about that while also balancing access. And really just enjoyed this one. I like I said, it was a fun one. We had shared a lot of laughs and also a lot of signal, which I wasn't surprised given Eric's background, and since I've been following him since 2023 or so, he certainly delivered. And so to tie that all together, as I mentioned, we talked about the trade-offs as it relates to different products. And so ultimately, if you're someone who's serious about Bitcoin, whether you have a material position already or you're looking to build one, certainly would encourage you to speak to our team at OnRamp. We'll walk you through multi-institution custody, inheritance, insurance, Bitcoin-backed loans, etc. Really, we're focused on helping to protect our clients, whether it's an individual, a business, or an institutional investor, for the long term, for decades to come. So just give us a call, head to our website, book a consultation, speak with me or someone else on the team, and I hope you enjoy this episode. It was a good one. All right, welcome back to The Last Trade. I'm excited for this one. I'm excited for many of our episodes, but I am particularly excited for this one as well, because we have Eric Balchunas joining us from Bloomberg, and I'm joined by my co-hosts, Brian Cubellis and Michael Tanguma. So Eric, before we get into your background, I do just want to say I appreciate the work that you're doing. It seems like, so the three of us, Brian, Michael, myself, we've been building in the Bitcoin space for a while, and I came across your name first as really the leading source of information as the Bitcoin ETFs started to actually have some momentum, even before approval and then after approval. And so I would say, for anyone who's not familiar with your work, definitely check out Eric's X profile, because Eric, it's a breath of fresh air, I must say, because there's so many accounts on X that just post like crazy stuff all day, all caps. They don't actually read anything that they're posting. And you kind of take the opposite approach, where you post signal and you have some of the best research reporting on the ETF complex for Bitcoin, inflows, AUM, and really where Bitcoin sits today, the ETF complex, or IBIT in particular, being the 20th largest ETF. So Eric, really appreciate your work. Thank you for joining us today. It's an honor.
Yeah, no, thanks. I'm glad you enjoy that account. I enjoy doing it, so it's mutual.
Awesome. Well, yeah, let's get into it then. So I think for the three of our sake and the audience sake as well, would love to just hear a little bit more about your background. I know you've been at Bloomberg for a long time. It seems like you've had this meteoric rise in popularity with covering the Bitcoin ETFs, and you've probably seen how much fervor and passion there is in this space. So we'd love to hear just quick snapshot of your background at Bloomberg, and then take us to kind of the time when you started to have more of your eyes on the Bitcoin ETFs, kind of around the approval, et cetera, and then we'll get into where we are today.
Yeah, I started at Bloomberg in public relations, believe it or not. I went to college for journalism, and then after 9/11, I moved to Jersey, and I wanted to transfer out of the New York office, and the only thing they have in Jersey is Princeton, and that's the data office. So I went from PR to data, which I still think I'm the first and only employee to ever make that move in history. There was a writer, I forget his name, from the 70s, and he talked about going from Harvard into the Army. And I feel like this was a similar move. You think you're like going to all these parties, and PR is a great way to get like near the top of the firm quickly. and then data is like literally like the factory, that is where the terminal is made. So it was actually a really good move for my ego. And also to learn how the company was made. You got to put the data on the terminal. That's what we sell. So I spent 15 years in data. I'm surprised I made it that long. It wasn't totally a perfect fit, but ultimately I then got into research, which is a combination of data and PR and journalism. So I'm actually using all of my facilities in research. And the research group was started at Bloomberg maybe like 15 years ago. And it was stocks and bonds. And then like, I don't know, when we bought the Barclays Index unit and they got us some headcount, and the guy who ran Bloomberg Intelligence had seen me around doing TV and being the ETF guy internally and said, well, why don't you cover it for research? So since then, I've been doing ETFs, and then I obviously got introduced to Bitcoin and crypto. First in 2013, when the Winklevoss filed for their Bitcoin trust. People forget they filed when it was under $100 a Bitcoin. I should have just bought a shitload of Bitcoin then, and I wouldn't be talking to you. I would be, or I'd be on with a complete face covering and sunglasses, so you wouldn't know my identity. Maybe then I would give the interview, but I would. I blew it off like everybody else. It was like the way I look at pickleball. It's for other people. I just don't get it. And ultimately, though, I kept covering the saga of the approval. And then when BlackRock filed in 2023, that was a meteor moment, moon landing moment. If you're an ETF analyst, you're like, what the hell just happened? And from then on there, it was off to the races. And as Jackson pointed out, I used Twitter a lot, and I found quickly that a lot of people had stopped covering crypto since SBF. Like there was a dearth of coverage in both the reporter and the analyst world in the mainstream. There was only the trades, it seemed like. And I found James and I, James Seyfert on my team, we found a huge opportunity to develop this new audience by giving like real information about, I call it ETF splaining and SEC splaining. Because there's whack jobs out there who just say anything. Literally, I'm like, where's your source? And then they don't even reply. And so people would look to us for like the truth, and we also had good sourcing, and we had a good feel for what was going to happen and how big it would be. And then when the ETFs came out, the flows were on. That's really where we specialize. And so we were able to provide not just the data, but also like really experience color on what it meant, why relativity, those kind of things are powerful from someone who's been in the industry for 20 years. And so I think that's sort of where you probably followed me after I started covering the crypto stuff. It got to the point where I would post about like a dividend ETF and the crypto people would be like, dude, what's this? So it was mostly a blessing, but a little bit of a curse. But I've enjoyed it. It's a really younger, more, it's just a very diverse, younger, energetic industry, and I think it's given ETFs this like new jolt of energy. So I know for me covering it 20 years, that's why I like covering ETFs though, because it sends you to every place in the world. But this was like a really massive, interesting journey to this world. I mean, this was like a whole new asset class being onboarded into ETFs, and it's really been exciting.
Yeah, I think to Jackson's point, I think you and James have a very like tempered take from this that really helped and tempered in both directions, like being open to the craziness and looking at it from their vantage point and saying, well, like, let's think about it from the everyday or the grand mal, like they
Yeah,
can't do this stuff, but also not being like kind of stuck in the mud as we've probably seen, where the vanguards are the easy ones to pick on of like there's no interest or demand for this.
yeah,
And it's an interesting that whole notion of the mimetic nature of the world we live in the meme stocks, but then in particular is like been a big substrate of Bitcoin's growth for 15 years. Think about Trump, like how much he appreciates and enjoys that engagement, similar to yourself on Twitter. Like there's some serotonin hit, and yeah, it's just been fascinating to watch. And then like the easiest example, there's probably you could go through a whole hundreds over 100 in a list of crazy like misconceptions, but the most recent one with the in-kind redemptions is like people think they're going to be able to park Bitcoin
Yeah.
and
Oh yeah.
send it out, and it's like completely nonsensical from a pure logistics perspective.
Yeah.
Like Fidelity or Coinbase isn't sending Jackson his ETF shares in a hardware wallet. Like from a compliance and OFAC
No, no.
perspective, it's so insane. But that's what people believe when they see this, and then everyone posts in all caps this stuff.
Yeah. Yeah, no. I also learned over the approval process, there is just such a demand for hopium that there's not enough hopium to fulfill the demand. And so the tweeters and the trade publication people end up leaning into offering hopium. And remember that Coin Telegraph tweet that said the BlackRock ETF was approved? And like the price went up, and it was all like some intern read something on a telegram or something. It was like, so there is, I've seen it firsthand in both the headlines in the trade publications and then also with the tweeters. On the flip side, the mainstream media leans negative and just continues to see, I think they underrate it and underestimate it. So this interesting dichotomy, I feel like James and I are in the middle. And I find we feel comfortable there, but I also have gone to a couple conferences, and I think I recommend people who cover this. I'm like, you should go to these conferences because you're going to see massive energy. I went to Token 2049 in Dubai. There were like 15,000 people there. The average age was probably 29, 30. I mean, I felt like the boomer they call me on Twitter. Like they call me boomer and suit all the time, and I'm like, I do wear a suit on Mondays for the TV show, but otherwise I'm not wearing a suit. I'm Gen X, and honestly, I try to tell them ETFs are pretty punk. I mean, Wall Street doesn't love ETFs. They're cheap. They don't make any money for Wall Street. So when I go to the crypto conferences, I sort of try to present ETFs as like, you should be careful not to underrate the power of the ETF. It is a kick-ass vehicle that's going to be hard to disrupt, especially for the tokenization stuff. That said, that industry is just full of, it's young, international, vibrant, and real tech oriented. And I felt going there similar to how I felt when I first went to ETF conferences in like 2006, 2007. And since, I was like, this is kind of the future. And so that really helped bring me on in terms of being someone who takes it totally seriously. But at the same time, the industry itself is good of making fun of itself. Like when I would get into a fight with somebody on Twitter, and like I could see people jump in and be like, "Oh yeah, this guy's insane," like. Or when the price of Bitcoin goes down, like let's say it has a sell off of like 20%, people will put a McDonald's hat on themselves in their profile picture. And so I do enjoy that self-deprecating humor that is mostly there. You don't find that as much in TradFi. So I like that. There's some features of it that I'm, find that fit my personality. That said, I do think that there is a large underappreciation for how much has happened over the past 30 years in traditional finance to bring costs down. So I think the crypto assets themselves are like really powerful and interesting, but the intermediaries, I think they have their hands full with BlackRock and Schwab. These companies live in a terror dome of the ETF world, which is, it's a tough place to compete. So I think there's like, I think both sides, it's almost like a generational gap and a cultural gap as well. And I've really enjoyed going between. I think both sides underappreciate things about the other sometimes because they do get into somewhat of a tribal state of mind. But there's a bleeding in, but they're coming together. It's like a marriage, whether you like it or not, especially since Trump won. And I feel like we're going to find a lot of blending of the two worlds over the next 20 years.
Yeah, one thing to call out, because I know Jackson has a number of ways to take this, but there's a theme that's playing out here when you reference going from PR to the data room or TradFi to crypto, and this is how we built this business. It's like, and this is a crude version of when two disparate ideas come together and collide, that's when they have sex. Like when they have sex, like that's when the magic happens. Like
Sure.
that's the beauty of life. It's like you have to have different parts of your brain working together to really like
Yeah.
come from a frame of reference that the market has never seen. So there's a lot of alpha in what you're describing. How do you actually build the right way? and we've been in the early hobbyist phase. This is like what Jobs really picked up on early is there was people putting computers together, but it was like, how do I actually make the most, like democratizing access to a really nice power machine? And that's where we're at. And then we're still early like 1990s in the internet and this boom, and there's
Yeah,
just no shortage of ways to like democratize and provide exposure
that's
in a
what it
way
feels
that
like.
people, yeah.
It feels like I started my career in the mid 90s. I'm pretty old. And I feel like this is internet stocks, at least the blockchains. Bitcoin is kind of a unique special thing, although that kicked off the blockchain, companies. But it's all feels like the 90s internet, where these companies are, you're not quite sure who's going to grab the most market share, especially within the blockchains area. Bitcoin is such a unique thing. That's, again, I separate the two. That's another thing, that there's this tribal warfare sometimes, especially with the maxis, where if you say crypto and you actually mean Bitcoin in there, they get so they get so pissed off. They're like it's like, I'm trying to think of a metaphor where like they're like, don't do you dare call me that. Don't
Eric, could I?
associate me with those plebs. Anyway, it's really funny, like the that thing. But I do use crypto to mean everything, and then I'll use Bitcoin separately. But I do agree with them that Bitcoin is kind of a special case.
Yeah, 100%, Eric. Well, so yeah, there's a lot that we could talk about, a lot of different directions we can go in. I think important though, so you do mention your Gen X in your Twitter bio. Is that because people are calling you a boomer so often on Twitter? But
Actually, I
seriously,
put that in before because I like, if you ever read these Wall Street Journal or Financial Times, anytime they write about generations, it's always millennials and boomers, and they might mention Gen Z. It's like we're just forgotten. Like Gen X, it's like, I was like, dude, look at all of the great music we produced, the great artists, the great athletes, Tiger Woods, Tom Brady. Like we've produced the greatest shit. Between it's people who really came into this work, came into their prime from 90 to 2000, like the 90s. I just feel like Gen X is, I'm proud of my generation, and it just feels like underrepresented. So I throw that in there. That way people also know to get ready for some of my metaphors, which tend to be 80s and 90s heavy.
awesome. I love it. So, all right, so you took us like 2013, Winklevoss twins dismissed Bitcoin, as most people do on the first pass. And then so you kind of took us to your rise in popularity because you had the background and professionalism to cover the Bitcoin ETFs. I'm curious, when the ETFs were starting to get momentum and you guys were tracking ahead of approval, so summer 23 and then into approval 2024, what was your thoughts? Like, were you already kind of convinced on Bitcoin as an asset class, as an investment? Did you understand the thesis, or did you kind of have to understand that in real time as you were digging deep into the ETF complex?
Yeah, real time. James knew more than me, so I could always lean on him a little bit. But sometimes, again, he's a millennial. He's and doesn't have the same reference points, but he's really good. But ultimately, I've had to learn in real time everything. Like I used to do a show called ETF Friday every Friday, and I just was covering ETFs starting in 2007. And they'd be like, "Oh, we're not going to cover small caps today. We're going to do VIX because the VIX went up." I'm like, "What shit?" So I'd have to sometimes be a quick study on like, what is the VIX? What are VIX futures? So ultimately, in my coverage of ETFs, I would just download books from Amazon constantly. So I did that with Bitcoin and with the blockchain stuff. And it just became a quick study, enough to get me by. And then over time, going to the conferences, context clues. So I really learned it all on the fly. And I think I underrated a couple things with Bitcoin. I underrated how much Satoshi was standing on the shoulders of giants. I've written a book about ETFs and I've written a book about Vanguard. And in both those cases, a lot of shit happened. You talk about that connection of two ideas. In each of those cases, a bunch of stuff happened before that idea was able to happen. And there were a lot of technological advances. There was a community, a scene. These were smart people. They were real libertarians. And so when Bitcoin was birthed, it was almost like it had just taken like 80% of what was out there, added 20%, and that was it. That's why it became the one. Same thing with Spider. SPY's the first ETF. There were index participation shares. There were multiple attempts at similar things, and obviously index funds had existed for 20 years. And so in each of these books I've written, it has that same consistency. When something is a big hit, it's never someone hitting their head in the toilet. Like, I think the average person thinks like, this dude Satoshi just put a magical coin on the internet. It's so much deeper than that, and it's honestly a real. It's also the indestructibility of it as a truly decentralized thing, and how to make incentives work. There's so much that goes into that design to pull it off, and to pull off something that's decentralized and totally secure. It's worth something. I mean, that alone. So I underrated that part for sure. And I underrated the scarcity. I guess I just never thought about it, but the idea that only 21 million Bitcoin can be mined, and we're almost at that point. I mean, they're only like coming out in little tiny drips at this point. Well, just for all intents and purposes, like, what is it? 94% of the Bitcoin are done. So like, that is powerful too, because in every other commodity, they have a way to get the commodity. This is one where you don't have that. Anyway, so those are some of the things I underrated about Bitcoin that I've evolved on a lot, and it's made me take it even more seriously. And then with the flows into the ETFs, that's been, something that has been pretty mind-blowing as an analyst, because they've broken like every conceivable record. But you could have those flows and have me still not respect Bitcoin. That could happen. And I think there's probably ETF analysts out there that feel that way. They're probably like, oh God, I wish this wasn't a hit. But for me, something else that we've noticed, again, James and I are working on a book about this, but we've interviewed all these people. Two things we've noticed. It's rare that someone goes deep into studying it and doesn't increase their allocation. Like, I've never seen somebody go, yeah, this is fucked up. I'm going to go buy back to stocks. They typically get more into it. It's like there's a direct correlation between the amount you learn and the amount you allocate. The other thing is, even people who say to recommend 1% to 2% for a normal person into Bitcoin, they themselves are like 20% or more. And this reminds me of ETFs. I would interview these institutions about their usage of hedge funds and all these like expensive type stuff. And I would say, do you use this stuff in your personal account? They'd be like, no, for my personal account, I just use cheap ETFs. I buy Vanguard. But they wouldn't do it at their job. And I love those disconnects. And I find it here with some people. I think they're afraid to tell anybody to like follow them into being like 20, 30%, because just in case it blows up or there's a problem, they don't want to hear it. But it is interesting that there's that gap. So those things also, make me respect it and understand it more. But I am a classic case of somebody who, kind of got at least half orange pilled. I don't think I could be fully orange pilled because I am a Boglehead. I wrote about Jack Bogle and Vanguard, and I'm a true index fund guy. I like cash flows. So by being a true index fund investor and really appreciating stocks, bonds not so much, but mostly stock investing, especially U.S. stocks, I'm never going to sell all that. And so I do feel like being a Boglehead and understanding, why stocks are good investments, it gives me some level of vaccination from being totally orange pilled and being like, I'm done, sell everything, put it into Bitcoin. I'm not anywhere near there. So that's where I am now.
I love it. There's so much there. This is like watching, I would have said boomer, but you said Gen Xer. This is watching Gen Xer in real time get orange pilled and go through that, because a couple of things you referenced and Jackson pulled up, there was a Cornell study, and this is something that we need to get better on our side about, is like most people they've heard of Bitcoin, but they don't know there's only 21 million. And that's like foundational to the whole thing, the finite scarcity. So the second most people hear that there's only 21 million, it naturally means that there's some value, there potentially value if it's valued at 100K, and then it's just like underwriting that personally. The thing you mentioned about the one-way street carries a lot of weight because I've been in this space professionally since 2019, 20, but then was trying to get in back in 2018, was interviewing with a lot of the Genesis guys back in the day, and they're all still around somewhere. Like, so not only is it mental and personal capacity from a balance sheet, but also professional capacities. Like, people don't come into the space and leave. Like, it's just there. And where that ties into there's the component of everything you described about the shoulder of giants. You can basically, if you switch the word, it's gold. Like what we're watching today is gold. If you think about thousands of years when people figured out gold had relative value, well, it didn't happen overnight. There was all these different people trading different rocks, and then other people were trying to scam them out of other rocks. And then ultimately, money has this liquidity profile, and the more liquidity begets more liquidity, and it's the ultimate market or the ultimate protocol. And so that's what we're talking about here is that you only get that once, that finite scarcity. And so, to your point about not being the ultimate maxi, where I was joking, is like that's where you will get because all you're going to want is equity that delivers more Bitcoin. So we have a whole venture arm that's just Bitcoin denominated. We only invest in companies that produce more Bitcoin and deliver it back. And that's where you get at when you go far enough down this rabbit hole is you're like, oh, wait, I want more Bitcoin. And so you're ultimately invest in things that deliver more Bitcoin because that's kind of just the rational thing to do is if you're long Bitcoin as so anyway, that kind of is it's very interesting how you've kind of gone through that and you're probably right there in the middle, but there will be a part when you come out the other side because you're honest with yourself, which is amazing because most people aren't honest in your shoes and they're like, this thing's just an asset and I just need 4%. And to your point, a lot of people don't tell people to do anything more than that simply because most people can't handle the volatility. And so if they don't have the level of knowledge and research you've done, then they're going to sell, or they're going to sell when it doubles, when we know this is like a longer game than that.
Also think I think the volatility shook out a lot of the casual tourists who bought it because Tom Brady advertised it in FTX and that whole and I don't think they're coming back just yet. I think a lot of the newer investors are from the more intelligent retail wing and advisors who buy the ETFs because ETFs are usually bought by smart people, not like dumb GameStop type investors, but more like intelligent, logical retail. And so I think Bitcoin's getting better owners, and I think it will bring the volatility down. Not that it won't ever have a huge sell-off. It'd have to have some black swan event, I think. I don't see anything in the future that is such a huge wall of worry. It's mostly good narratives. But there, you can't rule out a black swan, but I do feel like most people who buy it through the ETF probably are like 2-3%. And in which is good is because they have this boring core of Vanguard funds that they consider for like the real stuff. So this is like a small I call it hot sauce on top. And I think that gives them more intestinal fortitude to withstand some of the volatility. Even if they're not orange pilled, if they don't get this, I also think there's a place for Bitcoin if you're just somebody who gets pissed if you missed out later. It's almost like, I don't even understand it, but I don't want to have FOMO later. And that's fine. People invest in certain stocks and there's thematic ETFs that are the same thing, like uranium. Like, okay, it's not really represented in my S&P 500, but like, I don't want to have FOMO if we go completely nuclear for energy. I'll buy a uranium ETF just so I don't kick myself later because I had that idea. So I do think
We call those spike coiners.
spike coiners.
Spike coiners.
Dude, that
Real
is
quick,
really good.
because you brought it up before we jumped. So what happens? What happens
I
if?
gotta write that down.
I got my mother-in-law was a spike coiner because she couldn't let it work out.
There's a guy we interviewed for the book who is definitely a spike coiner. I mean,
Yeah,
he that's really good. That's spike coiner is really good. We have a section of the book called suit coiners, which is like,
yeah.
which you can guess what that is. Spike
I
coiner is
wouldn't
pretty
consider
good.
you a suit coiner. I think you passed after this convo. You're not a suit coiner for sure. But real quick,
I
what
appreciate
happens
that.
if North Korea hacks Coinbase?
Yeah, no, this is that's a black swan in my opinion. Now, this Coinbase issue is interesting. At some point, if somebody hacks, XYZ third-rated Ethereum exchange, that's the exchange's problem and the investor's problem. But if Coinbase is almost the size where it would be everybody's problem, the government would have to step in, I think.
and print more Bitcoin?
I don't know. They'd have to. There's a point where I think if something
How
gets
would they print more Bitcoin?
well, let's go over this. If somebody hacked Coinbase, first of all, in this day and age, don't you think they'd find them pretty quickly? I mean, I just watched that. I mean, they can trace the wallets? You don't think
What if
they'd
they
be able to
what
deduce?
if they hacked it and burned the keys like in Iran?
I mean, this is a lot of money. Would the people never spend the money?
When I meant like burn the keys, like I know this is
In other words,
long tail,
hack
but
it and
like
just burn the keys and never use
yeah,
it,
yeah,
just
and
for
never
fun.
they would just for fun.
Would this be like an Ethereum maxi who just wants to fuck with the
No,
Bitcoiners?
I'm
What would
joking
your motive
partially
be?
just
Just
because
mayhem?
yeah, no, I'm partially joking just because that's a thing. I think the overarching deal, and this is a real philosophical thing that the suit coiners don't get, is there are no bailouts in Bitcoin. Like full
Hmm.
stop. Now,
Well,
if you have a certain size, then you might have the balance sheet of somebody to step in, but the core idea is everyone's long-term view of the asset is up and to the right. So at a certain point, your balance sheet can't step in. And so the bailout is the government printing more dollars to buy Bitcoin in the open market. It's kind of like a proxy for FDIC. It's like, sure, you'll get made whole on your 250, but they're going to have to print a bunch of money. So you're really losing out in purchasing power.
I
This
mean
is
that.
why the, go
Yeah,
ahead.
but okay. First of all, would this hack be the cold storage of Coinbase or the hot wallet?
Well, it doesn't necessarily have to be Coinbase. Like Fidelity is another great example because if you say like Fidelity holds 20% of the ETFs and the market cap goes to $1 million per coin, so what does that put us at 10x from here? So it's $20 trillion. Well, Fidelity holds, let's just say they hold 20% of that 20 million. So they have $4 trillion. Fidelity loses the assets, right?
Well,
Fidelity.
stop though. Let's go over the losing of the assets. You're saying somebody's going to hack into the cold storage.
You got to be careful, Eric, because I'm going to tell you that 6 months ago, Fidelity lost all their clients' data. It's all like all open. The most secure
That's
thing that they
different
would have.
than. So again, but in your scenario, are we talking about hacking into cold storage?
Well, there's multiple levels of hacking in the cold storage. There can be collusion because the idea is the core idea is like an ROI return increases with time, meaning it can be a 10-year game. Like there's a lot of different and the easy example probably is simply we've never seen an exchange last longer than X.
Yeah. I mean, look, I over time there will be a dilution of the custodians because Coinbase was early and like the most legitimate at the time that all the ETFs started, but Fidelity's doing I think their own and somebody else, and like Schwab is going to let actual just crypto trade on that they're going to trade. The banks can now custody it, and the custodian fees for Coinbase, they don't print them, but I believe they're pretty hefty. So in the ETF world, they're always competing on like cutting fees, and like we've seen on the stocks and gold world, an issuer will move from like I don't know J.P. Morgan to State Street to save like 2 bips. So I think over time, Coinbase will lose some of that business. So I do think there'll be a natural dilution. In the gold world, what they do, like GLD stores the assets in London, but IAU came around and said, hey, we're going to store it in London, Toronto, and New York. So like there'll be probably a time where they evolve into storing it into different places just to minimize that outside black swan risk. The other thing is most of the Bitcoin is in a cold storage, not a hot wallet, which I think the last hack, I forget the name of it, but it was a hot wallet that got hacked, it wasn't in cold storage, which is I think easier to hack. Again, I'm a little out of my area here, but ultimately though, I think when it comes down to this, if you're an ETF investor, you have to look at the track record of a BlackRock and Fidelity. And yeah, they're not perfect, but you either trust them or you don't. And I think for the most part, people trust. That's why them coming in was so big, because they are lending their brand and trust to this area. And they're not fucking around, man. I mean, they're not like they're gonna take every precaution necessary But yeah, it's definitely something.
Yeah.
And then
Well,
quantum obviously is a risk down the road. And there's just like, it's something that people have to consider. And so if someone wanted to go and get their own wallet, we totally advise that. Like if this is something that even worries you a little, or if you're in Bitcoin because you think there's going to be a societal collapse and we're going to go into Mad Max world, you want your own wallet. So we tell people, if you are one of those people, gold has the same thing. There are gold bugs and there are the truly paranoid. And there's actually an ETF that lets you get your gold delivered to you. They do have retail redemptions. And there's a gold that stores the gold in Switzerland only, because just in case these other Western countries have known to take the gold. So I think the Bitcoin ETF space will evolve to kind of account for some of what you're saying and to appeal to possibly like the real hardcore paranoid.
yeah, so I think we're both probably saying the same thing because I think we do trust, I think Fidelity and Coinbase being hacked and all that's very long tail risk. I think the best mental model to use is what we're describing is like if we were using email and we're explaining the internet and it's like, well, I don't get it. And it's like, well, yeah, because we don't know what it looks like. And so the angle I'm referencing here is today, the way you're talking about ETFs and how most people talk about ETFs is the pre-coiner person buying 1, 2, 3%. But if we go down the logical progression you're in the middle of, you ultimately will have anywhere between 20 to 80+% of your wealth in Bitcoin. And when that happens, it's the same thing of if you bought fire insurance on your house. Like this is the progression of like how this
Yeah.
plays
Well,
out because
but your
well,
progression, is this the person increasing the allocation on their own, or just that Bitcoin went up so much
both.
it actually ate up their portfolio?
Both because they're looking basically how it's performing against everything else. But so let me
Yeah.
just finish the
Okay.
thread.
Go ahead.
So that's the logical progression for, like you said, that most people, as they get more educated, they increase their exposure. And so what happens there is very similar to like why you buy house insurance. You don't expect for your house to burn down, but if it does, you can't get knocked out of the game. And so the
Yeah.
logical progression for the hardcore people, and this is why half of the 2 trillion sits on those hardware devices. I'm not saying that's the right move. I'm just explaining to you the rationale is because for 15 years, the only way to actually know that your house wasn't going to burn down was to sever the internet connection. And if somebody's holding 80% of their wealth, the rational thing to do is not to leave it with a single custodian, because even if there's 0.01% that could happen, if it happens, you lose all of your wealth. The last thing I'll say is we've never seen digital scarcity in our whole entire life, so we actually don't know how to manage it. And 2 trillion is fundamentally different than 20 trillion. So
Yeah.
to expect that some firm like a BlackRock knows how to do it is just kind of doesn't make any sense. Or Fidelity.
Yeah, I don't know. I wouldn't go that far. Like BlackRock and Fidelity have both hired people from the crypto world. But also the other thing is, again, this is something that has been totally a worry with gold. When gold ETFs came out, they were thoughts they would like rob the trucks, or people didn't think the gold was there. And then the gold
Well,
has
the
been,
government robbed all the gold. That's the point.
well, that was in the 20s. But the gold is in like
We're about
they
100 years later.
no, I get you. Like that's what I'm saying. If you go and if you're somebody who even like starts to talk about how FDR confiscated gold, get your wallet, get your own wallet. Like you should do this on your own. You should, and then print the phrases on dog tags and then bury them in 3 different spots in 3 different countries. That's the route that there's a Bitcoin investment path for everybody. But to your point, as if we look in a world where it's like 80% of most people's portfolios, I'm sorry, that is the America's problem.
Hang
Like
on.
it almost becomes too big to fail at that point.
So, can I jump in here for a second?
But I don't like disagree. I probably give a little more faith to the BlackRock and Fidelities of the world simply because they do have a track record.
But you're not
And-
really trusting BlackRock or Fidelity. You're ultimately trusting who they've outsourced it to, which
Well,
is
of
Coinbase.
course. Yeah, but I'm trusting them to pick good partners. That I mean,
All right, so-
well, real quick. At the end of the day, and we've gone over this for years in ETFs. Every now and then there's like the huge sell-off, and like some ETF sees a discount that's not normal because a market maker wouldn't make the market. And so over the years, I have come to this conclusion that The ETF is but the thing here, and beneath it is a whole ecosystem that works every day using market makers and APs and all this shit. And at the end of the day, the ETF gets the blame, even if something over here was the problem. And they know this.
So I think we're like all kind of on the same page here. And I also would say that this is just the function of Bitcoin being a newer technology, a newer asset class, right? So we're still in the early stages of figuring this out. I think we should remember as well that the ETFs have only existed for 18 months. And prior to that, right, people were doing what Eric said. You stamp your seed phrase in steel and you distribute it in multiple different geographies, or you just leave your Bitcoin on a Coinbase account. I think what we need to do, though, is kind of go back to what I think is one of the biggest stories in finance right now, and would be very remiss not to talk about it. And that is just the meteoric rise of the Bitcoin ETFs. Like we kind of jumped over what I think is one of the most critical stories, and what most people outside of this Bitcoin ecosystem and investment community are talking about. So Eric, I would love to go back to this maybe before we go into more discussion around custody and in-kind redemption, some of the things we wanted to talk about, because you, like I said at the top of the episode, you and James have done a phenomenal job of tracking all of this. And so you've covered extensively the success of IBIT in particular, the fastest growing ETF by a wide margin in terms of major milestones for assets under management. It's now the 20th largest ETF. Yeah, that's a great chart. 20th largest ETF. And I don't think we need to move that much higher in the Bitcoin price for it to be the top 15, top 10. So I'd love to just hear your thoughts. Like, can you help contextualize the success of the ETFs? Because I still think it's not fully appreciated. And I think you're the perfect person to kind of take us from January of 2024 to about 18 months later, July of 2025.
Yeah, so I can't overstate it. It was the greatest launch in the history of ETFs. Since day one, really, just very out of the gate. I'll give you like maybe 2 or 3 stats, and then, I won't over talk it because the stats will do most of the talking, but the Bitcoin ETFs have 153 billion. Okay, that's just almost as much as gold ETFs have, and they've been out 20 years, right? That's just about where gold is, and that's 1.5 years. So that right there, gold to me would be their bogey because it's a very similar type of trade, store of value. So to be tied about with gold, there was a time where it beat gold and gold had a run, but they're kind of in the same ballpark already, right? We think they'll triple gold ultimately. The other thing is IBIT alone is the fastest ETF to $80 billion. It did it in 341 days. The next fastest was like 1,600 days. So we're talking over 4 times faster than any other ETF. And the other ETFs that got there that are around that 1,600 day mark are from Vanguard and BlackRock, right? These are like mega ETFs. There you go. VU, IFA. I mean, these are studs. Those are both in the top 10 of all ETFs. So if your record is, if you're that much faster than these studs, it's not like those other ETFs were flashes in the pan. They're legit legends still. So that's a good sign. It means you are 4 times faster than a legendary ETF. The other stat is now, as you said, IBIT's now 20th in the top. It's the 20th biggest ETF. And that is interesting because of the other 19 on the list, the next youngest is like 12 and a half years old. And IBIT's 1.5 year old. So it's like a toddler hanging out with teenagers. That's insane. And then to add more, around the 88 billion mark, which is where IBIT is now, it becomes the most profitable ETF that BlackRock has. Number one. It's right around, let's just assume it goes to 90 in the next couple weeks. It will be the most profitable. And then they have 1,100 ETFs around the world. So that's insane. So those are all just the other stat that's really fascinating is if you look at the holders, the only people who we know hold it have to file a 13F, which is you have to have over $100 million. So it's like medium to big size fish have to file. Amongst those filings, The IBIT has like over 1,000 filers represented in only the first 5 quarters. And if you add all of them together, all the Bitcoin ETFs, it's something like 1,600 different institutional filers represented. If you take some other ETFs launched in January 2024, they're going to have like 10 to 20 filers, right? That's almost more impressive because it's easy to get little retail investors to bite on something new. It's like getting, if you've ever gone fishing, it's easy to get minnows and small fish to bite. Harder to get the medium-sized fish and really hard to get the big fish. It's the same thing for ETFs. Big fish need volume and like legitimacy and big brand. It takes a lot. But these ETFs have gotten medium fish early and a couple big fish. And that normally doesn't happen until year 3 or 4. So everything that would normally happen in like 10 years has happened in a year and a half.
Hope you're enjoying the episode. If you could just do us a favor and drop a like and leave a comment on YouTube, that really helps a lot. If you're not subscribed already, please do that as well. We really appreciate it. On Spotify, Apple, 5-star rating. All these things help. We spend a lot of time booking guests and then actually preparing for the episodes to make sure it's a good use of your time. And then recording, of course, editing, and distributing them. So please, if you can, just leave a like, a comment. It doesn't take too long, and it goes a long way for us. And we hope to have Eric back on, so show him some love if you can in the comment section. Leave him a like. We want to have him back on, especially as his book is published, and we'll want to reassess how Bitcoin has grown in maybe the next 6 months or so, where the ETFs are tracking. And hope you enjoy the rest of the episode. Also, if you're not subscribed, check out our research on onrampbitcoin.com/research. Yeah, I mean, that's a great recap there. And one thing too, so it ties into one of the points you just mentioned about BlackRock's ETF being the most profitable ETF, and you said over 1,000 ETFs in their complex as a firm. And then something you mentioned earlier is about incentives, right? And how Bitcoin aligns incentives over time. And I'd just be curious your thoughts on Larry Fink, not him in particular, but him as an edge case or an example where 7 years ago, right, Bitcoin is an index for money laundering. And now, whether he actually understands Bitcoin or he believes in its merits as an investable asset, he is a proponent of it because it is the most profitable ETF that his firm offers. So I'm just curious, like what you think the implications are for this, for traditional finance. And I'll just tie this in right before I hand it over. I'll tie this into one thing that Brian flagged ahead of this call as well, with T. Rowe Price doing layoffs more recently, and they're a firm that really hasn't adopted Bitcoin in any meaningful way. Not to say that's the sole reason, but I'm curious to hear the dichotomy, in your opinion, between firms that embrace it and firms that choose to continue to ignore it.
Yeah, you actually just gave me an idea. Bitcoin could help. Passive. Okay. Sorry. Thank you for that. T. Rowe, by the way, is Bitcoin would have helped T. Rowe, or something, but they were late to the ETF game, and they were late to find an answer to passive and Vanguard. Some of these old legacy 1990s mutual fund companies were just late to deal with the massive disruption that was Vanguard, low cost, and ETFs. That said, the stocks that these mutual funds own went up a lot and have offset a lot of the outflows. So T. Rowe still makes a ton of money, but they lose customers, because a lot of the assets become more mirage assets than actual new customers. Fidelity is probably a good example of somebody who got hit by that same problem, but they did go heavy into crypto, and I think it's helped them. They also went heavy into some other things. And so I think Fidelity and BlackRock are two examples of firms where, because of the Vanguard effect, and I wrote a book called The Bogle Effect, that's the guy who started Vanguard, because so many people have gone to cheap index funds for their like stocks and bonds, it's robbed Wall Street of a lot of money. And so over the years, the firms that have thrived and managed to deal with the Vanguard effect best are ones that have been real aggressive. I call it hustle points. They're diving for loose balls. And Larry Fink is the ultimate hustle point CEO. I would say BlackRock is the equivalent of like a 12-year NBA All-Star who still dives for loose balls. That is how you handle dealing with Vanguard. That's how hard Vanguard is to deal with, because they're basically a nonprofit. Anyway, BlackRock, I think, went into Bitcoin for two reasons. One, opportunism, but they have this public stock. BLK is the ticker. They have to appease shareholders. So as they cut fees to appease to investors, they got to also make money to appeal to shareholders. They've got to serve two gods at once. And Bitcoin allowed them to get a new source of revenue because a big thing they were into that died down a lot was ESG. And so Bitcoin became like a new opportunity set for them. They also, I give him credit for just keeping an open mind, because there's other people who have the same goal, but either their brains are closed or their politics is so strong they still crap on it. At least Larry Fink was like, let me rethink about this. Let me listen to some of the younger people, because there's one guy in his firm, Robbie Bitchnick, who by all accounts deserves a lot of credit. He came from XRP. But it took him like 7-8 years internally there. I think I want to say he was hired in 2013 or 2015, something like that. So he was there for a long time before they filed for a bit. But I'm sure he was in people's ears talking about it. And so ultimately, though, BlackRock was smart to hire him, right? That was pretty good foresight to hire somebody from that world and just bring them on board. So I think BlackRock deserves a lot of credit for being flexible and having, that mental liquidity. But ultimately, I don't know. I can't peer into Larry Fink's brain to see if this was how genuine this was. But I will say one thing that I have in my slides when I do Bitcoin presentations at these conferences is I talk about BlackRock being massive, and it wasn't just the ETF. Larry Fink himself went on CNBC and Fox Business, and the stuff he was saying was seemingly radical coming from Larry Fink. He was like, hey, if you think the government's, totally debasing your currency, or if there's going to be like this is a way to protect your money. I mean, that is pretty crazy. And then you've got these wholesalers like Jay Jacobs, I'm telling you, who could sell ice to boomer Eskimos. He's like down in Brazil talking about Bitcoin with that purchasing power of the dollar chart, since the Fed came out. I mean, he's like, this is like serious orange pill type stuff, but he's delivering it through institutional language and boomer tones and boomer dress. That's why I think the term Sucoiners is perfect. And that to me is very powerful. And that is also what you don't see with gold. I don't see anything like that. I go to all the conferences. I don't see nowhere near the excitement and wholesale firepower aimed at gold. They all have gold ETFs, but there's nobody talking like this and nobody doing this. So you can't overstate the importance of BlackRock. In my opinion, Bitcoin, and again, you could disagree with this, it has two eras. It's almost like BE and AE, before ETF and after ETF, but you could almost say BB, before BlackRock. When that filing hit, the price was 28,000 or something. It immediately caused this buy the rumor rally of 100%. So it doubled just on the filing. Then when the ETF came out, people thought, okay, that's it. It'll be to sell the news. And it came, it went back up. So I did the math. It's up something like 280% since that filing. And it never looked back. And I think the ETF also legitimized it, because remember when the filings were out and it hadn't been approved, there was a question of whether any APs would be willing to name themselves in the documents. Because if you can't have an AP, you wouldn't get it approved. But Jane Street stepped up. And you got to thank them, because they filled in that AP slot that was crucial. After the Bitcoin ETF came out and it was hugely successful, the other big banks were like, you can put our names in there now too. And so, Christian Laettner has a great phrase in that 30 for 30 documentary called I Hate Christian Laettner, because he was like kind of a prickly guy on Duke in the 90s, the basketball player. And he was like, winning cures all. Like, you may think I'm a dick at practice, but when we won that championship, like, we were all friends again. And this is sort of what Bitcoin, I think, is doing. It's kind of cured a lot of the skepticism and like second guessing. Then you throw in the Trump election and it's a done deal. I think ultimately it's been completely mainstreamed. There's no stigma attached at all. And really, I think the only people who are continuing to crap on it or not use it are just, either they've just made an investment decision that they do think it's going to eventually go down, which is fine, or there's a anchor bias issue where they attach it with Trump and they don't like him, or they attach it with SBF and they think there's just too much fraud. And that's, that's their problem, I guess. But the big blob of like financial mainstream ecosystem is pretty much diving in. And I think the ETF started that snowball.
Yeah, I think we tend to agree. There's a notion of nobody wants to catch a falling knife, especially institutional capital or wealthy capital, and the ETF was that first like signal that this is coming. I think it's kind of remarkable when you think about we got to $2 trillion market cap with no regulatory clarity, and it's starting to get clearer. How do you think about the ETF exposure and then what we're seeing this past year with the Treasury and public listing exposure, and just thinking through, how is that proxy happening? Is, the assumption or the thing we kind of go with is the notion of it's hard to put Bitcoin in a bucket, right? You have a 60/40, and then you have this commodity sitting there. And some of the assumption is that it's easier to put an equity with Bitcoin exposure into that. And that's some of the demand. Is that how you think about it, or how do you think about the fervor? Because it feels like it's just starting. We're only at
Yeah.
120K. We have a lot more room to run there.
Well, MicroStrategy filled the void that was there because there was no ETF. They became the surrogate ETF for a while. Makes total sense. And strategy is just like this very unique situation. These other treasury companies, though, I do wonder how much. I don't totally get it, given there are ETFs, unless you're just a fan of the CEO. But I've heard one thing where it's a way for like OGs to kind of like get their Bitcoin off chain a little bit, and then get shares of the company, and then they can like better manage cashing out a little bit if they want to, rather than like moving old coins. I don't know. I've heard that is one reason to do it, but I don't see any of them getting too big. I think MicroStrategy will be like dominant, and these other ones will, I don't know. There's my only thing is like leverage is a double-edged sword. So if you're going to have leverage, it'll help on the way up, but it'll hurt on the way down. And I do worry about that a little bit. Now, the other side of it is I think most people will pick an ETF. I mean, if you look at the assets, I mean, the ETFs as a whole have 1.4 million Bitcoin as a group. I think MicroStrategy is only half that. The other treasuries are nickel dime rounding errors. So they have double all of those already. So I think most people prefer to get one for one. I want to buy the ETF and just have it track Bitcoin. And that's always been the case in ETFs. People love that direct, physically backed exposure if they can get it. That's why the Bitcoin futures ETFs weren't really that big of a deal. And so I think those will dominate, but where are they in the portfolio? That's a great question. There's a lot of answers to this. Personally, I think a lot of people are losing faith in bonds because the ag bond index hasn't kept up with inflation, doesn't even hedge you that well in sell-offs anymore. So I think bonds may take a little haircut. Also, if you are trying to hedge inflation, this could be seen as a store of value and be in your alternative bucket if you have that. But it's a little volatile still, so it also could be a replacement for some Mag 7 stocks. Bitcoin is just highly unique in that regard. Personally, I would probably trim my equity portion just to be safe, because I don't know, you cannot rely on it as a hedge for your whole portfolio. Or if the stock market implodes, it may go down just as much. And so I think you have to look at it as a hedge for the global money printer and a technological opportunity. And because of its volatility, I think you'd have to put it in alts or equity. But there are certainly other parts of the portfolio that are losing some of their appeal, and namely bonds. And so there's a lot of opportunity right now, I think, for this whole world to sort of get into that 60/40 portfolio in the next several years. But generally speaking, we have this chart called the modern portfolio, and it says 85% cheap beta, which would be like stocks and bonds and Vanguard index funds for like 3 basis points. So it's like beta, you know what I mean? You know what beta is, right? Okay, so cheap beta, and then 15% hot sauce. And that would be like, I think crypto would fit in there perfectly. You could put, single stock investing in there. You could put like thematic investing. There's things that you just want to speculate on that aren't covered by that cheap beta that give your portfolio a little spice and a little flavor. And to me, Bitcoin, that's why Bitcoin, I think, is stronger than gold in the modern portfolio, because it can play that role of store of value, but also play the role of hot sauce, which is in high demand right now because a lot of people have married Vanguard index funds and are committed to wait 30 years. But in the meantime, they do want to make it a little more interesting because that's kind of boring to wait 30 years to compound. So to me, Bitcoin actually checks two boxes, and that's why I think it's got more appeal than gold for the time being. That gold had a good first quarter, though, you can't lie. But that's why we think it'll triple gold. But those are all good questions. But I don't think the treasury companies are going to like grow that big relative to MicroStrategy or the ETFs, in my opinion. But it is interesting.
Yeah, the bucketing conversation is an interesting one. I think you described it well in that like it is, a multidisciplinary, multifaceted asset. You can look at it in various ways. And I think that has been, a driving factor in the sort of traditional finance persona being unwilling or just struggling to comprehend, like, where does this fit? How do I look at this? And then typically the answer is just like, I'm just going to ignore it and pretend it doesn't exist. And I think, going back to what you were saying around the willingness to have an open mind about it, like that, this is something that's always fascinated me about Bitcoin because like everyone's heard about it over the past decade. At some point, somebody said something to you about Bitcoin and you probably just brushed it off. And then it 10x's, you hear about it again. That creates a real psychological bias in your brain that you missed it. And well, now I can't buy it now, it 10x'd. So I'm going to continue to ignore it. And I think that proclivity or that psychological bias is even stronger in the TradFi professional brain.
Yes.
Because they have an air of sophistication about them, and in many cases, rightfully so. They're have invested for a living. Some of them have been very successful in their own right in various other asset classes, and so that seeing it, missing it, perhaps multiple times, creates this ingrained bias against it, and it takes a real sort of humility and shot to the ego to say maybe I was wrong. And Larry Fink is an example of this, whether you think he genuinely believes in it or not. That's at least how he's talked about it, is that I had this realization. I realized I was wrong. Most recently, there was Philippe Lafont from Co2 who had a very similar commentary around it, just like, the most important quality you could have as a successful investor is the willingness to say, what if I am wrong about this thing? And I think that is the biggest thing holding back the TradFi brain, is they're not willing to say, what if I was wrong about this? Because to your other earlier point, if you actually look into it in a genuine way, you come out the other side wanting exposure. And so I think that's just a fascinating thing about Bitcoin, because that is the adoption story. That is what drives price over time, is education, people realizing what this actually is. And we know the supply is finite. So as that education increases, demand increases, and the price goes up. Like, that is the whole story in my brain. So it's fascinating to just think through how that evolution is occurring and how the psychological factors at play are progressing.
Well,
go ahead.
One quick note to that. That is if you just view it as hot sauce or like a tech stock you missed out on. Right. I do think there's another component here, which is debt and the money. Like, if you really dive into the amount of money that's printed and how we left the gold standard in the 70s and then how it really escalated in the past 20 years, you can get pretty scared if you look at that. You're like, because everybody knows governments are irresponsible and they're going to throw money at any problem. Like, who wants to be like held back by like the amount of money you can print? And the amount of money that it takes to pay off just the interest now on the budget is like the second item. Once you get there, I think that's a front door for anybody, regardless of what the price is at that moment. Because if Bitcoin is attempting to solve that problem, then, well, that's why it matters. It's more than just then you didn't miss it, because we're just at the beginning of a lot of this. So I find that if you're like an MMT person, like Keynesian on steroids, you probably look at Bitcoin as like you're like a novelty, a Ponzi scheme, whatever. But if you look at that currency debasement and the potential for inflation and what happens to money, And because stocks are a little long in the tooth, they've had a 20-year rally pretty much, and the valuations are really stretched to historical levels. You kind of open up your mind, like, well, I know the government's never going to stop adding to the debt. I believe that. Doge couldn't, Doge came along and like gave it a good shot. There was a lot of political will. It couldn't even do it. And so you're like, well, this will something that is scarce and hard, and the government can't get its grubby hands on it. Like it cannot dilute it. And just something, anything that is undilutable by the government is a powerful proposition if you go through all that. Then it becomes something where like, well, maybe the price isn't that high. So I do, because you're like, the debt is just getting started. We don't even know how crazy this is going to get, because the amount that grows per year is crazy. And in America, it's not even that bad. In other countries, it's like crazy. So I really am somebody who, I'm not a full like hawk, but I do think this experiment of running up this much debt, irregardless of how much GDP we have, is not something I'm really comfortable with. And so Bitcoin and gold or something like that, or even like art or real estate to a degree, these are these hard assets that I think help people have some comfort. But the thing with all those other assets, it's really hard to get those unless a lot of those other assets are a pain in the ass, or for really, really rich people. Like, who has access to like a Picasso painting? So I think Bitcoin is like a democratized version of one of those sort of real assets that can be undilutable by the government. And that to me is the front door where you don't blow it off anymore. In my opinion. I mean, people have other theories on this, but that alone is enough. And then you think, well, if more people think like me and they buy it for a store of value and the volatility comes down, then it has a fighting chance to be a currency too. But I will say that the interface has to get way better. To go get a wallet, and then they got to make it like, and it's also expensive. I'm sorry, but even 40 basis points to like exchange your dollars for Bitcoin is a ripoff. I'm used to 1 basis point in the TradFi world. So I think as the exchange rates come down and the volatility comes down, and the interfaces are as easy as using fantasy football, then you might be having talk about it being a global currency. So I think this store of value is like maybe the first step. So that's why in this project we're working on, one of our theses is that the ETF, it isn't responsible for all this, and obviously it didn't make Bitcoin, but it kicked off what could be this nice chain reaction of making it legitimate. The adults are here, you can feel safer, and then it got more mainstream, better owners, seen as a store of value, volatility comes down, and ultimately it's a currency. This is not definitely going to happen, but if you trace it, you could honestly have this pretty logical chain of events that started with the BlackRock filing.
So we don't have to, not to go back there, but you can't do any of that if it's in the ETF. You can't use it as a currency. But either way,
True.
the core component of, you went through the logical correct progression that is absolutely correct, as long as Bitcoin enforces a fixed supply of 21 million. Like, that's the
Yes.
rational outcome, is
But
that. So like, as long as that stand.
How would that change? Wouldn't you need 96% of people to say,
It won't change, because it's just not the rational thing. Like, we all don't want
yeah,
our money to be debased, so it won't
yeah,
change. And so, but your one, just easy, quick, because it's an easy one to dismiss, but it makes logical sense, is in the same way, like when you transact for gold or any fixed asset, there's like, whether it's operations compliance or you want the security around it, so you naturally are going to pay something, because nothing in the world's free. There's a reason where, whether it's transaction fees or custody fees, cost more today nominally than they will in the future, because the delta between your cost versus the appreciation is like, it makes zero sense to like bite over 40 bips when the price is appreciating at a CAGR of 49% year over year. So as the market grows, not only just like the internet, everything will become a lot easier to use. All of those costs will be easy. And this is the part of the suit coiners is sometimes a pejorative, in the sense of like, it's shit coiners but suits, so like they're going to steal your money. And the reality is, it goes back to crypto. Like the idea is have enough humility that, not you, but just in general, if we got to 21 million finite scarcity, like that's the 0 to 1 moment of similar how gold came about after being built on whatever happened before that, then you can figure out everything else, meaning how do you transact? How do you secure it? You don't create other ones like that. And so anyway, I'm just kind of sharing with you. I think you know
Yeah.
these things, you're coming through it in this book, but this is the rational outcome. And the alpha is in this middle part of saying, this is where the market's going. You can't tell people to put a dog tag on it because that's not commercial and feasible. But also when you get far enough down the other side, because you've already worked through this, you're mentioning government and unsustainable and debt, but you also said before they're going to bail out Coinbase. Like those two things are completely juxtaposed. And so anyway,
Not really. I mean, part of the it would be ironic if there was a Bitcoin bailout, given
but
that
how would that
Bitcoin was
look?
given that Bitcoin was birthed, in the middle of the bank bailouts. But no, I'm just saying that, in the case of like a hack at the size that you're talking about, which would be, it would be the biggest robbery in the history of the world by like what, 50-fold. I just think the press and the government and the FBI and the amount of resources that would be put on that would be so monumental that it would overwhelm the situation. It would be front page headline for weeks. This would make it an emergency. That's all I'm saying. I'm not, because like in that hack with the lady who was doing the rapping, crocodile tear, whatever. What's her name? Lady Crocodile.
I forget her name. I know who you're talking about.
Yeah,
The
and
Bitfinex
the
stuff?
couple, the Bonnie and Clyde couple, that like, first of all, they only hacked, I think it was a couple billion, which is still a lot, and it was from it wasn't a mainstream exchange, but they ultimately couldn't spend their money. They couldn't really get the Bitcoin out. Ultimately, though, they did some things that were traceable and they got busted. And that made really big news. And that was only a couple billion. So you're talking about $1 trillion theft. That I just, in the ETF world for 20 years now, people have been worrying about ETFs, this, that, and the other. And some people be like, well, ETFs hold junk bonds, and the junk bonds could go illiquid in a huge crisis. And the ETF would then trade at a discount. And I'm like, okay, fine. It trades at a 2% discount. And then, but I'm like, no, what if it's a prolonged? I'm like, dude, at some point you're creating a picture of World War III, and we're going to have bigger fish to fry than the fucking junk bond ETF. So like you could take these scenarios to a point where they're so big and crazy that they would become such a bigger problem than just, should I use the ETF or not?
Well,
I just,
I think the easy example, just to make it more rational, is because you said this earlier, I forget the number, but it was like 5 to 10x the largest robbery in human history happened in the digital asset world that nobody talks about. It was the Bybit hack. It happened the past 12 months. It was 1.75 or roughly billion. The largest other hack was Iraq, gold in Iraq, and then some painting in Paris, which were like 30 to 50 million. And this one was, 20x, I think 20x. Point being is, if we all agree this grows, then that means sovereign adoption grows. We're going to start settling trade in oil and other things. It would just be a sovereign that would take it. What are we going to go, like, we're going to go start a nuclear war with Iran or whoever took it? Like, there's a lot of progressions where it doesn't have to be an individual not worried about stealing it, because that's where this all goes. And again, it's not to say like this is crazy. It's more of the rational thing for investors as their exposure goes from 3 to 25%. You just, if there's 10%, 2%, 0.1%, I'm mainly sharing like this is going to become more of a
yeah,
narrative as Coinbase goes from 800 billion to 1.8 billion, because you already hear it in
yeah,
your or 1.8 trillion. You hear it in your
yeah.
circles, people's uncomfortability with Coinbase's concentration. Imagine the price doubles. That's just going to increase. And there's not that many world-class custodians to actually pick up the scraps. You don't want a net new custodian to do it either because they don't have a track record.
Yeah, two counterpoints. One, I think if it grows and gets to be bigger part, I think the regulations will adapt to that, because it'll be more in, people, even the people in Congress will be like, shit, this is like 50% of my portfolio. I think, you have to have faith in the system a little bit to sort of adapt to some of that change. The second thing is, whether one of the thing about having your own storage. Now, I know if you are doing it for somebody and you're like putting their stuff in really safe places, I think there's always gonna be a market for that. I mean, there's a market for Swiss bank accounts to this day, but for somebody to have a little bit of Bitcoin in a cold storage and then walk around with it, I think I think in the LA fires, some people lost their Bitcoin forever. There's Bitcoin, and the one guy who's trying to get his Bitcoin out of the Scottish dump for like 10 years. The ETF does fix that. I would say your firm fixes that also. But if you get too big and people know you have Bitcoin, then you get like a safety issue. You don't, like you said, you want to get your finger chopped off. So I think there is this tension between wanting to not wanting control, like safety over yourself versus safety over your Bitcoin. But I think that's a personal decision. It's subjective. It also depends on how much true trust the system and BlackRock and these other companies. And I think everybody will make the choice that's right for them, and businesses will pop up to like sort of cater to different types of people with different needs. So I'm a little skeptical on a situation where Bitcoin is 80% of like normal people's portfolios. Coinbase gets hacked. It's a $4 trillion hack, which would be like, what, 8 million times the biggest robbery ever, something like that. So
I think, to be fair, before it gets to 80%, I can promise you it'll be figured out, because nobody's going to park 80% in that scenario.
yeah.
To give you a little sneak peek from the regulatory, specifically SEC, when this next cycle, call it 4 years from now, 3 years from now, something like this will, and it doesn't have to be any of these people, the key holders, it doesn't even have to be this firm, but this will effectively be the way it's set up, because we've had ETF providers, Bitcoin ETF providers behind
Yeah.
closed doors tell us this is bulletproof. The problem is it melts brains, because how do you go to the SEC and you go from explaining Bitcoin to
Yeah.
explaining no institution has unilateral control? And this scales proportionally, so don't get fixed on
Yeah.
the number of keys, because you can have 5 institutions, have 3 of 5 have to agree before any assets move. It's just kind of like where we see the market going eventually
Yeah.
when an ETF holds $1 trillion. It's the
I mean,
rational move to
honestly,
not.
you
Yeah.
should pitch this to the ETF issuers. I'm sure if an ETF came out and said, hey, we're going to be like IAU, where they hold it in 3 different vaults. We're going to hold your Bitcoin with 3 different custodians, and these custodians will have, that may sell. I mean, that level of security may be a differentiator to the list of ETFs out there. I bet that, we could see that.
Yeah, and I
But
think when they're looking for marketability, I know we have to run, but when they're looking for marketability right now, nobody gets fired for going to Coinbase. So that's where we're at today in the process.
yeah, I do agree. I think Coinbase, it's too much of the custodian market. I would like to see it get spread out more. One other quick thing, that 3 keys, that reminds me, I was like this guy, Jamie Catherwood, I think his name. He's like a real historical financial guy. And we've had him on the show. And every time we think something's new, he'll say, no, in the 1800s, your 3 key thing, they used to have these locks with gold or bonds in them, I think. And they had 3 different keys, and like 3 different banks would send a person like a 3 lock,
Yeah,
a 3
that's what
key.
this is in digital
That's
form.
what it is. Yeah. No, they used to
And
use
that's how
that
I
back in the
explain
treasure
it.
chest
Yeah,
days. Yeah.
I love that. I
Yeah.
love that.
Anyway,
That's how we
that's what that
explain
reminded
it
me of.
to the boomers, is like there's a lock safe, or there's a safe, and there's 3
I could see a
different
movie where the guy
locks.
cuts the
Yeah.
arm off of like the 2 guys with keys, and then he, like some crazy shit. But there's also, isn't there a movie where like multiple things have to be done at the same time to maybe it's Mission Impossible, but this idea of like 3 keys going into the same lock at the same time is a powerful visual that I think people concerned with security will respond to.
100%.
Well, unfortunately, we've hit time, and Eric, we're gonna have you back on if you agree. If Michael didn't scare you away today, hopefully I'll have you back on in a few months, or maybe.
No, look, it's fine. Look, I appreciate all this. This is keeping me sharper, and almost everybody in the ETF I do go on these podcasts where it's just straight like, I own Bitcoin, ETFs made number go up, I love you. But in a lot of cases, like, people do have businesses that compete with ETFs, and they're not perfect. I just think they do check a lot of boxes for people, and we try to make sure that people know. But like, I'll give you this one story. TheStreet.com ETFs got so big for like all these reporters were covering them, and the media got a little ahead of itself, and they write stories like, "Here's 5 ETFs to play Amazon earnings," and I was like, you know what? Just buy Amazon. It's okay. Like the ETF is not the solution for everybody. I love it. I dedicate my career to it, but there's going to be cases and things where people have different needs. You know, private equity is probably better in a different wrapper or something else. So, you know, there's
we
ETF isn't
personally believe
the
ETFs, everything's good for Bitcoin, and ETFs are ultimately good, and so we see that as the gateway. Can we kind of hold you to when this book comes? You're one of the first. This is one of the first places you come talk about it because
Yeah, sure.
we'd love to have you on because it
A lot
sounds
of
like
these
the
topics
ETF is
are,
the beginning of the
yeah,
book, and there's a whole progression of like how this
yeah,
permeates like every part of society, and that's kind of where we think this all goes.
absolutely. We're focusing on the Since ETF because all the other books written, there's so many books. They don't have any of that. So we're trying to cover the financialization of it, but it's like hitting a moving target. Whenever we hand it in, it's like 8 months till it publishes. Like, my God, that's like 8 years in like Bitcoin years or whatever. And it's like, I'm not sure how we're going to deal with that, but we're doing
Now
our
you need
best.
a new chapter on the three keys.
I know. 3 keys. Yeah, no, I mean, look, there is a section on security, and it's pretty small, but maybe you got me thinking. Maybe I'll reach back out and try to evolve that a little bit because I do want the reader to know all the possible scenarios. Like we're not, you know, we're trying to give people every bit of information so they can be the jury for themselves.
Yeah. The reason why I'm a stickler on this is because I've seen everything happen and everyone new comes in and they believe it can't happen again and it just continues to happen because
Yeah.
we've never seen digital bearer asset, independent of if it's
Have
BlackRock
you
or
ever
if it's
had a
Mt.
Coinbase
Gox.
person on your show?
I worked at
I
Coinbase for 12 months, Eric. So
Oh, you did? Okay.
I did, yeah, before joining OnRamp.
Are you
yeah.
like so are you like the guy who was building the Death Star who gave the plans to be like, wait, the Death Star is actually like you can blow it up, guys.
What's scary about the Coinbase thing is I've talked personally to their head of institutional, very well-known guy in the space you probably met. He has no idea how they custody the assets. When I explain what we do, he's like, "Why aren't we doing that? This is genius." And it's like, "All right, well, we got to go." You know.
Yeah.
So
Yeah, I
it
mean,
it's a complex space. It's super
yeah.
nuanced. And so that's the problem is that like it just takes so much time and it's the whole notion of proof of work. You had a whole career to like
Yeah.
dedicate pre-ETF. So then you're coming up to speed on the Bitcoin and you're the best in the class in the world to do it. There's very few financial institutions that also deeply understand Bitcoin. And so and then also when you think about the trajectory and then ultimately what does an individual want? Because somebody that's holding like our type of client that has anywhere between millions to quarter billion, they just need a number of different things because it's the majority of their wealth. And that's not
Yeah.
what TradFi builds. TradFi builds omnibus wallets and they say, hey, trust us, bro. And that's just not going to work in this world. And people are going to, that's how we're going to make all our money in the businesses we invest in.
Yeah. I mean, it you should say there's an outside possibility it may not work in this world. I think like it's a little definitive.
I will make any bet publicly here and I'll give you 10 to 1 odds it won't
Ryan,
work in
why are
this
you
world.
trashing your former company so much?
I'll allow it. I'll allow it.
Well, listen, you should have you really need to have the Coinbase person on.
We'd love to.
That I'd watch that.
I love it.
We
Eric, well,
need
thanks
the
for humoring us
We need the
because
guy guarding the Coinbase vault to come on
well,
and
see,
that
you're
must
actually, but
be
you're
elite.
helping me because like, there's no way on planet Earth, anybody knows how Coinbase custodies it in the same way Fidelity, in the same way Mt. Gox, Celsius, or Genesis, because it's an operational security hazard for anybody to actually know how it's done, which by definition means you can't actually park all your money there.
Interesting. All
No,
right.
You give me enough time,
Good thought,
Eric, you'll
man.
become if you give me enough time, you'll become a client, and then you will have another chapter because you're going to realize. I'm telling you, like the ETF providers have told us this thing's bulletproof. It's just nobody gets fired for going with Coinbase, so everyone's going to do that to start.
Well, listen, we're actually interviewing the BlackRock guy in a week. I'll definitely put this at least over to him and press him a little more than I probably would have.
Yeah, and the reason why everyone won't will push hard against it because it goes back to the mental model of traditional finance. You got to have eyes and hands on the asset because then you can do the things you want with it. And so it's the same way the internet. It's going to take a digitally native firm that understands Bitcoin deeply to build the new world in the same way it took Netflix, the way to re-change how media is distributed, not Blockbuster. It's really that simple. So there's no reason why BlackRock or Fidelity would win the new world. Like it's really, if you think about this as that radical, that mental model is as simple as that. Like they're not going to win in the new space because it's just not rational.
Dude, I mean, they BlackRock has the most Bitcoin besides Satoshi in a year and a half. I mean, that's pretty winning.
But it's a $2 trillion asset.
That's
$2 trillion.
That's winning, dude. I'm sorry.
I meant the long game. I meant the long game.
Yeah, no, I would say this. I would say there's room for multiple winners.
Of course.
That's true.
This was a great pod. I appreciate Eric.
Yeah, no, it's good.
You humoring us with this.
Yeah, we'll have to have you back.
Yeah. All right. See you guys.
Thanks.
Good talking to you.
Thanks so much, Eric.
All right,
Really appreciate it.
Bye.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.